A recent homebuyer sentiment and credit analysis survey conducted by ScoreSense has recently revealed that over 25% of US homebuyers are now reconsidering their decision of buying in 2022, and some of them are reconsidering out of fear of further inflation. Some of them simply can no longer afford it, and there are some other issues at play here as well. And so in today's video, we're going to break down what exactly is going on with the buyer mentality in 2022 and how this might affect the US housing market moving forward. Now, the first and most alarming thing I want to cover about this survey is that credit card usage is now up 49% year over year from the first quarter in 2022 compared to that same quarter in 2021. And inflation is a big driver in this regard because everything has gone up and cost so much: food, gas, clothing, rent, interest payments on mortgages, you name it. Everything is more expensive now than it was a year ago. This is leading regular consumers to basically use their credit cards just to get by. And this is a very big red flag for our economy moving forward, because when the day comes when people need to actually buy normal things like groceries and gas on credit, and they simply don't have the income to pay for these normal things, this could spell disaster moving forward. And that's probably one of the biggest concerns that I have when I saw this survey. Now, the one good thing about this is it does go on to say that major delinquencies of 180 days or more are down 17% compared to year over year. So that is a good thing. But I think it's just a little bit delayed, right? Because when you look at a situation like this, if credit card usage is up 49% year over year and the 180-day delinquencies are down, this could just mean that those 180-day delinquencies haven't caught up yet. Because if people have only just been using the credit cards more in the past couple of months, it could take a few more months for people to be in serious delinquency of 6 months or more, essentially. So this could be delayed information, and we might be seeing more delinquencies like this coming in the near future. Now, nearly 1 in 4 people who previously planned to buy a home in 2022 are now undecided on that decision, and they're citing a couple of different reasons for that. 30% of respondents said that the economy or their personal budget has changed their plans, and other respondents also cited inflation as a top reason that's influencing whether or not to buy a house this year, but 7% said it was their credit score. And the most concerning factor for potential buyers is finding an affordable home. So as you can see, affordability is the top of mind for most buyers right now, whereas a year or two ago, everything seemed like it was on sale with these super low interest rates. But we also know that people are taking more of these 5/1 ARM mortgages, and they're actually taking them over the 30-year fixed loans, because in a lot of cases, those ARM rates are now lower than the 30-year fixed rates, which is also a dangerous trend moving forward. Because if we do have a situation where the interest rates keep rising in the future, as it does seem like that will be the case, the Fed has promised that they're going to continue raising rates throughout the year, and that can have a significant impact on what mortgage rates could look like a year from now. And everyone who's taken these 5/1 ARMs right now could be sorry when the rates start ticking up and their mortgage payment becomes unaffordable. So that could be another thing to look at. So we have this clash of people taking undesirable loans as well as taking out more credit just to be able to afford everyday life. And the one good thing I see out of this is more people are starting to realize that, hey, maybe this is not such a great time to buy, which is what I've been saying in my last several videos. As a seasoned real estate agent, I have seen the market go up and down as I started my career literally at the start of the last housing crash. So I have seen this cycle come full circle now, and I understand the hardships that people could potentially go through, and I just don't want people out there to make the same mistakes that folks in the past did. And it seems like there's some people that are heading down that road to destruction right now, and others that are not, based on this survey. Now, especially since credit card usage is up 49%, you're gonna need somewhere to put all those credit cards. Today's video is sponsored by the Ridge Wallet, an ultra modern looking new type of wallet that is the perfect Father's Day gift this year. I like this wallet because it fits all of my things in here very nice and neat and orderly, and it also has a very compact design. As you can see, it's very lightweight and it fits in your pocket no problem, and it's a little bit smaller than my old wallet and obviously has a much newer and upgraded design. Make sure to use my link in the description below, as well as my promo code MBMoney to save 15% off of your Ridge wallet purchase today. So to me, this all points to people being overall concerned about truly being able to afford a home at today's prices, because sometimes new buyers don't realize the full scope of the amount of work and costs involved in owning a home. And what this survey shows is that more consumers are now becoming aware of just how much owning a home can cost them, not only upfront with the down payment and the higher interest rates, but as well as the ongoing maintenance and carrying costs of the home that you don't have when you're renting. So a lot of people are at an inflection point right now where they need to make a very important decision, buying versus renting, because before that choice was pretty obvious when housing prices were lower and interest rates were super low. But now that decision is not as simple as it once was. But once again, this is something I have mentioned in some previous videos as well, as this is actually really good news for home buyers out there who are still in the game. If you are still thinking about buying a house, this just proves my point that you're going to have less competition, because more people are essentially dropping out of the race because they simply can't afford it anymore, or they're just too concerned about where things are headed with the economy or their personal finances. So if you are a home buyer out there, you should be remaining optimistic and still keep looking. Don't give up, because now is not the time to be giving up. Now, I'm not saying that now's the best time to buy a house. I still think prices are way too high. But it's important to just keep your eyes on the market and keep looking out for deals, because number one, you never know when you're going to come across a really good deal, even when prices are high, because people have different motivations for selling and different properties have different issues that could potentially cause it to sell at a lower price. So that's the first thing. And the second thing is, we already know now that there's just less buyers out there than there were before, as literally 25% of these buyers surveyed are now undecided on whether they'll even be buying this year or not. So having less competition is a good thing. And I see in different areas of the country, things are already changing. I saw a video on YouTube the other day saying how the Bay Area housing market is changing. More houses are coming on the market there, and there's just less buyers out in the field looking. Realtors aren't filling up the open houses like they used to. So you're already starting to see these shifts happening. Now, another glimmer of hope I wanted to offer you guys, especially since one of my recent commenters said that all of these doom and gloom channels, referring to mine as well as many other real estate channels, always talking about all this bad stuff. This is another glimmer of hope for you guys. So there was this article that came out as well, talking about how some homeowners are refusing to sell to investors. And I think this is a great story for you guys to check out, because honestly, maybe some of these people have seen some of my videos, because I have mentioned this in a couple of my recent videos as well, that if we want the housing market to return to normal, then people need to start wising up and using some common sense. And that goes for sellers as well. If you want a good chance of being able to buy your next home at a reasonable price and not be outbid by a bunch of institutional investors, then maybe you should start off by doing the right thing yourself, by actually selling your home to someone who could really use it, versus just an investor who's going to turn a profit on it. And so there are some instances of this happening, so you guys can check this out, as well as all the other information I talked about in this video referenced down in the description below. Whether you want to call it a housing market shift, a correction, a crash, doesn't really matter. But the fact is, guys, things are changing out there, and that's why you watch this channel, as I like to just keep you updated with real-time info on the housing market. I think it's more important than ever to just stay vigilant on what's happening in America. Now, if you are still a home buyer out there and you want to know which markets are the most overvalued and have the biggest potential for a market crash in the near future, then check out this video right over here, and I'll catch you guys in the next one.